To help us understand this downturn, we're joined now by Neri, the lead economist of the Bank of the Philippine Islands. June, thank you so much for joining us. Try to give us an explanation how this downturn of negative 16.5% impacted you, I, and the rest of our viewers during this April to June quarter.
Yes, Rico. People are very surprised about why the Philippines is seeing the biggest decline in the ASEAN for the second quarter at minus 16.5%. To some extent, we anticipated it. Our forecast was negative 13%. And the reason behind that, Rico, is our growth drivers in the Philippines are exactly the industries or the sectors that are hardest hit by a pandemic. So we are OFW remittances driven, we're consumption driven, and our economic activities are concentrated in Metro Manila and the metro cities. So if you ban public transport, you have the most stringent economic situation in a country such as ours.
So have we already hit bottom, June, or is the worst still yet to come in this quarter and the following quarter?
Well, we're quite hopeful, Rico, that we have already hit bottom. And the reason for this is we have learned a lot of things about treatment, about how to improve the transport system, as well as technology. We've been able to use technology better as an economy. And it's very good that banks and financial institutions are around to ensure that the payment system in the Philippines is very efficient. At the same time, because the Bangko Sentral has provided a lot of liquidity, the system has lowered the interest rates, has allowed the economy to rebound in a digital, electronically led.
But June, the Bangko Sentral ng Pilipinas has aggressively cut the cost of borrowing, but are companies really borrowing from the banks? And it seems like the government and Congress have been very slow in enacting economic reforms to boost the economy.
Well, in the second quarter, Rico, naturally, you wouldn't see that many borrowers. The malls were closed, restaurants were closed, many of the services activities were not moving. So you wouldn't really see the impact of monetary policy just yet. But as June came and July, when we started to see some businesses reopen, you could see that there's more vibrance in the lending and credit activities in the corporate sector.
But taking a look at the stock market today and the peso-dollar exchange rate, it seems like they seem unfazed by the economy's steep fall. The stock market was up and the Philippine peso continues to appreciate against the US dollar.
Yes, the market to some extent has already been anticipating the deep decline in the economy in the second quarter. And if you consider that we should already be in growth mode, but a slower decline in the third quarter, they're starting to bet that we will recover sometime in 2021.
So if you were expecting this steep economic contraction in the second quarter of 13%, but it was a worse than expected 16.5%, what are your expectations for this quarter and the fourth quarter from October till December?
Well, originally we were looking at negative 5 decline in the third quarter. But because of the MECQ, we had to revise it to a lower number, around minus 6, minus 7%. And then as we move to the fourth quarter, we should see an even smaller decline year on year.
But June, with this steep fall in the economy, in first 0.7% in the first quarter, now 16.5% contraction. Has this administration lost any political capital? As the president said in his own words, there's really no more money left to help the people during this ongoing pandemic.
Well, on the contrary, Rico, the Congress has approved or very close to approving a bill soon that will allocate around 180 billion to be able to spend in the economy. And to raise the funds, you have the Bureau of Treasury going to the market to borrow an additional 400 billion after raising 300 billion earlier this year.
But that's a lot of money, June. As of today, our national debt is already at 9 trillion pesos. And that means every Filipino owes international and local lenders 83,000 pesos. How can we pay that back?
Well, the future taxpayers, Rico, will have to pay for the present situation of the Philippines to some extent. If you look at our debt, in absolute terms, of course, it's probably at a record high. But as a percent of GDP, as a percent of other indicators, you compare it with other countries, it looks very manageable. Still very manageable at this point, Rico. And we can afford to raise funds in order to fix the healthcare system, in order to support the transport industry, the hotel and restaurant industries, so that we can slowly reopen and go back to normal. Of course, until the vaccine, we are not going to be anywhere close to 90% of where we were last year.
June Neri, PPI's lead economist. Thank you so much for your insights on the Philippine economy.